The greatest battlefield in trading is not the market itself. The greatest battlefield in trading are our brain and heart. It's from the heart and brain that fear, greed, and doubt wage war against our better judgment. As we embark on this journey to trading success, guys, always remember that mastering the market is a step-by-step process, alright? It might take time to reach there, but believe me, at the end of the time spent on mastering how to trade the market, you will realize that the wait is worth it, right? In today's video, I'll be introducing the triple threat strategy, a powerful combination of the Bollinger Band, RSI, and Stoch RSI that will help you to conquer the crypto market. This is a strategy that I personally and frequently use, guys. This is my personal combo strategy. So by harnessing the strength of these three indicators, guys, you'll be able to pinpoint high probability buy and sell signals, maximizing your gains and minimizing your losses, of course. But here's the thing, guys. Even with the tons of indicators, you'll still need to keep that your emotion in check. For it is that emotion that tends to see or tends to check or tends to test you if you actually are going to be a profitable trader at the long run. As the great trader Warren Buffett once said, investing is simple, but not easy. So buckle up, stay focused, and may the odds always be in your favor. Now, guys, let's get into the video of today. Like we mentioned earlier, the triple threat strategy is a combination of three powerful technical analysis indicators, which are the Bollinger Band, the RSI, and the Stoch RSI. Now, starting with the Bollinger Band. What is the Bollinger Band technical analysis indicator? Now, the Bollinger Band is a technical analysis tool used to gauge market volatility. Let me repeat that again. Bollinger Band is a technical analysis tool used to gauge market volatility. Some of you might not know what volatility is and might be wondering what market volatility is. So, market volatility refers to how quickly and often a crypto price goes up and down the market. All right. So, for instance, now, let's say I want to check if BTC is a volatile token or not. All I have to do is to watch the movement with time, in respect to time. If BTC can have the power to go from $104, all right, to $100 within 30 minutes, and then from $100 to, let's say, $102 within 15 minutes, and then goes back to goes back to $92 within just 1 hour or 1 hour and a half, then that means BTC is a volatile token because it fluctuates rapidly within a short period of time. That's just what volatility in crypto terms mean, right? So having done that, then what is this Bollinger Band, or what does this Bollinger Band consist of, right? So let me just go to an example, or let me just illustrate it for you. Now, the Bollinger Band consists of three main components, all right? So in order to toggle on the Bollinger Band, all you have to do is to actually make use of these indicators right here, the one that I'm moving, right? Okay, so all you have to do is to locate the boll right here. It's called BOLL. It's an abbreviation for Bollinger Band. So you just locate it, right? And then click on it. And when you click on it, you're going to see three lines that are going to appear on the chart, right? So the Bollinger Band consists of the upper line, which is this one, all right? Then the middle line, which is the moving average, and then the lower line, which is the other lower band, right? So the upper line, the moving average, which is the yellow one, and then the lower line. So let me tell you how this Bollinger Band work in relation to price volatility, right? So when the price of an asset at a given time is less volatile, that means the market is not going up and down so rapidly. That's what they mean by less volatile, right? So when the price of an asset at a given time is less volatile, the Bollinger Band contracts. So let's look for a place, all right, in this trade where Bollinger Band contracts. So as you can see, the Bollinger Band contracted over here, right? It contracts over here, and let's see if I can see another given example. All right. All right, there's a shrinkage right here, right? It's contract over here, right? As you can see. So it contracts when there is low volatility in the market, and this means that neither buyers nor sellers are showing interest in taking action in the market. Buyers don't want to buy and sellers don't want to sell. You know, they're feeling kind of reluctant, or it's an indecision market. They don't know if to buy or sell because they don't know the outcome of the market. So whenever we spot this contraction, all right, whenever we spot this contraction and we see the Bollinger Band, you know, shrinking, all right, coming together, not expanding, shrinking, we call the period a period of low volatility, right? But there's a general law in asset volatility And the rule of that law says that after every period of volatility, let me clear this so that I can be illustrating a little bit. So after every period, right, after every period of low volatility, right, what follows is a period of high volatility. So after every period of this of this volatility, this low volatility over here, whenever an asset has a low volatility, the next thing that follows is high volatility, right? That is a general law of every financial market. And the period of high volatility means that buyers have either took over the market or sellers have took over the market. And in this case, it was the buyers that took over the market, right? So if it's the buyers that took over the market, then the price of the asset will go up, all right? And the Bollinger Band will begin to expand, just the way the Bollinger Band started expanding right here, the upper band and the lower band. It was shrinking over here, but when it got, like, when the volatility began to increase, it started to expand over here, right? That is just that. Another scenario is that when the Bollinger Band begins to expand, it means that like I told you, that the volatility of that asset has increases. And so also, if it is the sellers that took over the market, the volatility will also increase and make the market to push to the downside, because it is the sellers, it's the sellers that have took over the market, also making the Bollinger Band to expand, just like it expanded when the buyers took over. So let me see if there's an example of that. Right, so this is a perfect example, right? There's an area of low volatility over here, all right, and then high volatility came into the market, and then sellers took over the market, making the price to go down, and then the Bollinger Band to actually increase in its expansion. The bands like repelled each other, right? So now moving on to the next most important question: when can the Bollinger Band help us, or how can the Bollinger Band help us to know when to buy or when to sell? So aside using the Bollinger Band to measure volatility, right, the Bollinger Band also helps in measuring overbought or oversold condition. The Bollinger Band also helps in measuring overbought or oversold condition. I know some of you would want to ask what overbought and oversold conditions are. So overbought and oversold conditions refer to extreme market positions, all right, that can indicate potential reversal in price trends. So when a price is overbought, it means that the price of the asset has moved up to a level where the market is likely to reverse. All right. So typically, or should I say in simple terms, when the price of an asset is overbought, it means that buyers can no longer afford to buy that asset at the price that it is currently selling at. So now sellers have to break down the price by reducing the value of that crypto asset, all right, to actually stabilize the market. So overbought, underneath for overbought is too expensive, right? So another name for overbought should be too expensive. And when the market is oversold, it means that the market has dropped to a level where it is due for reversal to the uptrend side. It means that the market is too low, like the price of the asset is underrated, and the sellers are now willing to sell it but at a higher price, right? So how do we identify overbought and oversold condition using the Bollinger Band? So let me illustrate something for you guys. Let's go back to earlier times. This is BTC USDT, all right, in case you are wondering what asset I'm using to illustrate. So the question is, how do we identify overbought and oversold condition using Bollinger Bands? We all know that crypto assets fluctuate, right? We all know that crypto assets fluctuate up and down every day, and the Bollinger Band provides space for these coins, all right? So when I say Bollinger Band provides space for this coin, I'm talking about like the interior of the Bollinger Band. It gives the asset space to actually fluctuate up and down, right? So that upward and downward movement is the place where the volatility, like the increase in volatility, occurs. The upper band, which is this band over here, right? The upper band serves as the resistance, and the lower band acts as the support. The lower band, which is this one, we're talking about this one. So it acts as the support of the price. So when the price hits the lower band, it is considered to be oversold, right? And will be expected to go up. And when the price hits the upper band, it will be considered to be overbought and will be expected to reverse downward. So what this technically means is that, you know, there are some people called scalpers, right? I am also a scalper. So with the help of this Bollinger Band, what I do is whenever the price gets to this upper part or this upper area, right? So it is signaling an overbought condition, and I know that the price is likely to actually slide down to this area over here. So if I'm trading futures, I'll just place my I'll just go short, all right, and place my trade, and it will go down with me. And when it touches this lower band, I know that anytime soon the price will be due to actually go up, because this level is the oversold area, and if it gets up to this level, it will start going to its overbought zone, and then it will actually come back to this level. So that is just what I mean. So but there's one other problem that we need to solve. There are instances where the Bollinger Band, all right, hits the lower line, and instead of going back up, it will continue to go down. Or if the price goes up, instead of the Bollinger Band to hit the, instead of the price to just hit the upper band and come back down, it will continue to go up. Now that is where the RSI and Stoch RSI come into play. Now RSI, which is another name for the short name of Relative Strength Index, is a tool used in trading to measure the strength of a crypto asset price action, and it helps to determine if an asset is overbought, which is too expensive, or oversold, which is too cheap. All right, so the RSI has a value ranging from 1 to 100. So let's turn on our RSI indicator. All right, so you can just swipe over here and toggle on the RSI indicator right here. All right, sorry about that. You can just toggle it on right here. So I'll just click on mine, and the RSI will just appear just below the chart, right? So this is your RSI. I have RSI 7 and RSI 14. So RSI 7 typically means that the relative strength index is calculating 7 candlesticks, and RSI 14 typically means that the relative strength index is calculating 14 candlesticks. But I like to go with RSI 14 because it wipes off and fades away false candles, right? So having known what RSI is, we are going to go deep into how we can be able to use that. So the RSI has a value ranging from 1 to 100, right? And if RSI 14, which is this one, let me show you how to toggle on and off or change the setting of the RSI. So you just head over to this settings icon. All right, this is Bybit. So head over and click on the settings icon, and then you click on indicator right here. Right, so you click on indicator, and then you locate relative strength index right here. Okay, so you click on it. You can see RSI 1, RSI 2, RSI 3, and so on and so forth. And since we want to use RSI 14 on this strategy, all you have to do is to toggle off RSI 3 and RSI 24 and RSI 7, leaving only RSI 14 to be active on the screen, and then click on confirm. So we are just going to see RSI 14 on our screen just like this, right? So if RSI 14 shows a value of 30 and below, it means that the asset is oversold. All right, the asset has gone way down and may be due for reversal. But if RSI 14 shows 70 and above, it means that the price is the price of the asset. The price of the asset is overbought and is too expensive and may be due for reversal to the downside. Right. So let's see what BTC is currently showing now. This is the daily time frame. Let me indicate it for you. This is the daily time frame. So on the daily time frame, BTC is currently at 105,846, right? And our RSI is currently showing 65, right? It's currently showing 65, meaning that it is on an oversold area. So the value starts from 70 and above, but 65 is also close to the territory of 70. So as the Stoch RSI. All right, so the Stoch RSI is also like the RSI, but it gives a better detail than the RSI. All right, it also have a value ranging from 1 to 80. And if the Stoch RSI is showing from 20 and below, it simply means that the asset is oversold and may be due for reversal. Unlike the RSI, the normal RSI that has a value of 30 and below, the Stoch RSI is having a value of 20 and below. And so also, if the Stoch RSI is having a value of 80 and above, it means that the price of that asset is really overbought and is due for correction. So in essence, if you turn on your Bollinger Band and the price happened to be at the top of the upper band, which is in this case, for instance, our Bollinger Band is turned on, right? And the price is right here. Okay, and secondly, your RSI is showing 70 and above, or close to 70. In this case, the RSI is showing 65.65, right? Now let's toggle on our Stoch RSI to see what it is showing. Right, so the Stoch RSI is located right here. All you have to do is to click on it, and the Stoch RSI is showing 80 and above. So in essence, if your Stoch RSI is showing 80 and above, in this case, the Stoch RSI is showing 100, right? And the RSI is showing 70 and above, and in this case, it is 65.69, which is almost 70, right? And then the price of the asset is touching the upper band of the Bollinger Band. Guys, what does this mean? This means that the stock RSI, so I'm sorry, the price is overbought and may be due for reversal. That is just what it means, right? So as at the time that I'm making this video now, BTC is at 105,016, right? And it's touched this area, right? It's touched this area and it grabbed liquidity over here. I have a video for that, how to be able to spot liquidity grab. So there's a liquidity sweep over here, all right? And then BTC touched the lower band over here, as you can see. So after touching the lower band, it went up and it is now touching the upper band, and our RSI is showing 65, an overbought condition, and the stock RSI is showing 80 and above. In this case, it's showing 100, right? So this is a clear indication that BTC is on a on an edge of reversing to the lower side of the market, right? So also, I don't want this video to get long. I would have looked for an asset where the price is oversold, all right? And if you want the price to actually, or if you want to know if the price is actually going up, you turn on the Bollinger Band, and if the price of the asset, for instance, is at this level, all right, and your RSI is showing 30 and below, give or take, let's say 22, and then the stock RSI is showing maybe 13 or 12 or 18 on the daily time frame, guys. On the daily time frame, we are on the daily time frame. So if the stock RSI is showing 13, 14, 18, 10, you know, up just below 20, and then the RSI, not the normal RSI, is showing maybe 28 or 25 or 30 or 33, you know, somewhere within that range, and then the price of the asset happens to be somewhere here on the 1 hour time frame. The reason why I'm going for the 1 hour time frame is because the 1 hour time frame gives us a context, or it gives us a clearer view, or a zoomed out view of where the trend in the market is actually going, right? So if you do all this and it came out, you know, all the indicators are showing oversold conditions, you can be able to just, you know, go to the 15-minute time frame, guys. All right, go to the 15 minutes and look for your entry. All right, so the 15 minutes time frame is for looking for entry, all right, using the bullish signal candle patterns to execute trades. You can use the bullish engulfing, the bullish harami, or the hammer, the pimper. They are all candlesticks that you can be able to tell if the market is actually going to go up. So you can just use the 15 minutes for entry. More of how to use two time frames will be explained in the mastery class. Now, if you're interested to enroll in the mastery class, you can contact me using the WhatsApp link in the description below. Now, this strategy works for both spots and futures and forex, whichever market you want to use it, as long as there's Bollinger Band. Right? You can also use TradingView to actually make your analysis, right, and navigate how to both buy and sell the assets that you tend to trade. So I hope this video helps, and I hope you have a nice day.